Good evening, good afternoon, whenever you are. Thank you for watching my videos. I really appreciate everybody who's watching my videos and asking questions. And I have a question about Bitcoins that somebody once answered, and I thought it was very interesting, so I decided to do a video. Anyways, the question is, hi Davinci, I am really enjoying your videos so far. I had following a question about how an economy running Bitcoin as a deflationary currency could work. I had a discussion with someone about borrowing money with Bitcoin. They made a good point I could not defend Bitcoin on. Say you put a down payment on a house worth 50 Bitcoins. The lender expects you to pay back 55 in 30 years. Say Bitcoin ends up increasing in value by 5% on average every year. In 30 years, those 55 Bitcoins will be worth 4.232 times as much as when they got the loan. How are people supposed to afford paying off a loan when it increases in value that much? The lenders aren't going to have a negative interest rate because no one would give someone 50 Bitcoins and expect, say, 45 back in the future. They would just hold on to the Bitcoins. How would you defend Bitcoins here? Good question. Excellent question. To discuss, to flush that out a little bit, the time value of money, right, is that you obviously want money right now. And so obviously if you have money right now, it's going to cost you more, right, to pay off a loan and to pay it off later on in the future. And that's what the time cost of money is. This is why, when we hear about negative interest rates, it just doesn't make any sense. It's absolutely it's like, duh. Why would you take a loan? Why would you loan somebody money and get less back? It doesn't make any sense. Just hold the money itself, and that's it. Right? I mean, come on, right? But right now, there are $17 trillion worth of negative interest rates, and that's why that is a reason for a story for another time. Now, if we're all on a Bitcoin standard in the future, how is it going to work? How are loans going to work? It's a great question. And we have to go back into our history and see what we did with a deflationary currency. And an example of that was during the 1800s and the late 1900s with the U.S. dollar when it was backed up. The early 1900s when it was backed up with gold. So what you noticed right back then is that they still had loans. Loans did exist, but they did not loan people to buy consumer items. And as you know, a consumer item is a house. A house is a consumer item if you're not using it to earn money on, meaning to earn more from it, right? So if you understand that you don't take out loans for consumer items, we will have a banking system that will automatically know, okay, well, wait a second, I can't loan people out money like this because they're going to default, and this money is going to go up in value. So most likely in a long-term period of time, they're not going to have the same job that pays the same amount of money because they're going to lose the job, get another job that pays a little bit less over time because the money is going down in value. And so you can't loan money to somebody that has a job. You can loan somebody money to a business. A business is trying to create more value. They're trying to provide more services, more value into the economy. And because of that, there is a margin, right, of, okay, well, you know what, I can get that money back to pay off that loan in a reasonable amount of time because I'm actually producing a good that people are going to come give me money for, give me Bitcoins to pay off the loan. And so it makes sense there. Or it also makes sense in a short-term loan as well. So, for example, acceptance is a complicated term. Basically, when you're buying a good overseas, the bank over on that side loans gives you a short-term loan, to the vendor, and then ensuring that you're going to receive your product, basically. So those kind of loans, short-term loans, are also acceptable as well, and it will be done only for businesses and stuff like that. So effectively, the answer is, in short and sweet answer is, you will not be doing any of those things. No credit cards, no long-term, no loans on cars, no loans on houses, and that's a good thing. You know why? Because then housing will be affordable. The only reason why your housing is expensive today is people can create money by taking out a loan and then bid up the prices. If no one can take out the loan and bid up prices, then, as you know, prices will have to come down, and they'll be reasonable based on people's salaries. And that is the future you'll see when we have Bitcoin as money. Thank you for watching.